Hey everyone! Today we're diving into how to invest in the USA in 2024. Whether you're a complete beginner or looking to refine your strategy, I've got valuable insights for you. If you find this video helpful, please take a moment to subscribe for more finance tips. Let's start understanding the basics of investing. Investing means putting your money to work with the expectation of generating a profit. You can choose from several investment types, including stocks, bonds, real estate, and mutual funds. Stocks represent ownership in a company. When you buy a stock, you're essentially buying a piece of that company. Stocks can be volatile but offer high potential returns. Look for companies with strong fundamentals, those with healthy revenue growth, solid profit margins, and good management. Tech companies, for example, have seen substantial growth in recent years. But don't overlook established companies with a history of consistent dividends, like consumer staples or utilities. Bonds are essentially loans you give to companies or governments. When you buy a bond, you're promised regular interest payments, known as coupon payments, until the bond matures, at which point you'll get your principal back. Bonds are generally considered safer than stocks and can stabilize your portfolio. U.S. Treasury bonds are often the safest option, while corporate bonds can offer higher returns with increased risk. It's crucial to assess the credit rating of bonds, as this indicates the likelihood of repayment. Real estate is another viable investment option. Investing in physical properties can yield rental income and appreciate in value over time. You can buy residential properties to rent or commercial real estate, like office buildings. If managing properties sounds daunting, consider real estate investment trusts, REITs. These are companies that own, operate, or finance income-producing real estate, providing an excellent way to invest in real estate without the hands-on management. Now, how do you start investing? First, you need to set your financial goals. Ask yourself what you want to achieve. Are you saving for retirement, buying a home, or simply growing your wealth? Next, establish a budget. Determine how much money you can invest regularly without compromising your daily life. Consider choosing between a brokerage account for general investing or a retirement account like an IRA, which offers tax benefits. So what should you invest in? Stocks are a great option, but do your research. When considering stocks, focus on industries and sectors that interest you or have strong growth potential. For instance, technology stocks can be rewarding due to their rapid innovation cycles, but they also come with higher volatility. Look into established companies with a track record of growth, as well as emerging firms that could disrupt the market. Don't forget to diversify across different sectors. Healthcare, renewable energy, and consumer goods can provide balance. Research companies' earnings reports, industry trends, and market conditions to make informed decisions. You can also consider exchange-traded funds, ETFs, which track a specific index and offer easy diversification. They are typically low-cost and provide exposure to various sectors. If you're interested in real estate but don't want to deal with property management, real estate investment trusts, REITs, can be an excellent alternative. For a more stable investment, bonds, particularly U.S. Treasury bonds, are a safe choice that pays consistent interest. Evaluate the type that aligns with your risk tolerance and investment goals. Consider bond funds or ETFs if you want exposure to a diverse range of bonds without managing them individually. Municipal bonds can also be appealing for tax advantages, especially for higher income investors. Always check the issuer's credit rating to gauge the risk of default, and aim for a mix of short-term and long-term bonds to manage interest rate risk. In real estate, start by deciding whether you want to purchase physical properties or invest through REITs. If buying physical properties, look for locations with growing job markets and amenities, as these areas tend to attract tenants and increase property values. Research local rental demand and property prices to find deals that fit your budget. If you prefer a hands-off approach, REITs can provide exposure to real estate without the hassle of managing properties. They offer dividends and potential appreciation, making them an excellent option for income-focused investors. Now let's talk about when to invest. Timing the market is tricky, so consider a strategy called dollar-cost averaging. This means investing a fixed amount regularly, regardless of market conditions. For example, if you invest $100 every month, you'll purchase more shares when prices are low and fewer when they're high, potentially lowering your overall average cost. When you're ready to buy investments, first do thorough research using financial news, analysis websites, and trusted advisors. Look into a company's earnings reports and recent news to understand their performance better. Then, once you've decided what to buy, use your brokerage app to make your purchase. You can place market orders to buy at current prices or limit orders to set a specific price. When deciding where to invest, consider these popular platforms. Brokerage accounts. Platforms like E-Trade, Robinhood, and Charles Schwab allow you to buy stocks, ETFs, and options with user-friendly interfaces. Real estate investment platforms. Websites like Fundrise and Realty Mogul let you invest in real estate without direct ownership. Robo-advisors. Services like Betterment and Wealthfront create and manage diversified portfolios based on your risk tolerance. Cryptocurrency exchanges. Platforms like Coinbase and Binance offer access to a wide range of cryptocurrencies. Retirement accounts. Use IRAs or 401k plans through your employer or personal accounts for tax-advantaged investing. Research each platform's fees, features, and available investment options to find the right fit for your goals. Now let's discuss potential earnings. Your returns will depend on your investment choices and strategy. Stocks. Historically, the stock market returns around 7 to 10% annually after inflation. Individual stocks can offer much higher returns, but with increased risk. Bonds. Generally safer than stocks, bonds offer lower returns, typically between 3 to 6%. Government bonds are usually the safest, while corporate bonds may yield higher returns. Real estate. Real estate investments can yield around 8 to 12% annually through rental income and property appreciation, though it requires more management. Your earnings depend on market conditions, investment strategies, and the specific assets you choose. To wrap it up, investing in the USA can be a rewarding way to build your wealth over time. Stay informed, continuously educate yourself, and adjust your strategy as needed. If you enjoyed this video, please subscribe for more financial tips and insights.